Miscellaneous tax preparer regulations, don't you all worry. We are almost done. We got a few more slides and we'll be done and call it a day. Tax return preparers have various responsibilities and penalties can be assessed by the IRS. I've never heard of that before. That's why I messed it up. I've never heard of what is the IRS? For failure to comply with certain requirements. However, no tax preparer penalty is imposed for an understatement of a taxpayer's liability if the preparer demonstrates reasonable cause for the understatement and acted in good faith. Here are some examples of these preparer penalties. Failure to retain a completed copy of a taxpayer's client's tax return. Now, tax preparers must retain a completed copy or a list with the name and the tax identification number, so usually Social Security number, of each return prepared for 3 years after the close of the return period. The penalty for failure to do so is $55 per instance. You'll see some of these things we saw before, some instances like these, but also make sure you're understanding these $55 amounts. Failure to provide a copy of a tax return to the taxpayer client. Tax preparers must also provide a copy of the tax return to the taxpayer client no later than when the return is presented for the taxpayer's signature. We can see an IRC penalty assessed here for failure to comply in this matter. Next, failure to furnish the tax preparer's tax identification number. Tax preparers must include their tax identification number on tax returns prepared for their clients, so that's your PTIN. Failure to do so can result in an IRC penalty. And lastly here, failure to sign a tax return, furnish the ID number of the preparer, and file correct information returns. Tax preparers must sign the returns they prepare for clients, provide their ID number, and file correct information returns. Penalty for each of these failures is $55. So for all of the $55 penalties mentioned, the maximum penalty is $28,000 per return period. Taxpayers should be aware of these responsibilities and comply. Make sure you avoid penalties. You are a good little tax preparer. You go about your day, and the IRS loves you. All right, last slide here. Let's wrap it up. No IRS penalty for a CPA's error in tax return calculation. Now, the IRS does not impose a penalty on a CPA for making an error in calculating a tax return, provided the error was not due to willful or reckless conduct, such as intentionally disregarding tax laws or showing a reckless disregard for the rules. There's an error. So generally what would happen, right, in any situation where there's an error, the IRS says, hey, we found an error. You as the tax preparer, you're probably going to find out where the error came from. Was it you not doing your due diligence? Was it just a simple calculation? And then generally, depending on the reason, well, that'll result in what penalty or not penalty you don't have to face. That would be what we see here. Providing clients with a copy of their tax return, a CPA must give their client a copy of the client's tax return, or they may face a penalty. A copy should be provided no later than the time the return is presented for the taxpayer's signature, making sure that we are getting these down. Obviously, I know we're repeating some of these, and that's because likely they're important. Ding, 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 wink at you, nudge, nudge. Probably make sure you know these. Prohibition on negotiating a client's refund check. Again, we've mentioned this a few times. The CPA is prohibited from negotiating a client's refund check. This is to protect the client's interests and to ensure that the CPA does not misuse the client's funds. Sounds pretty solid to me. Signing tax returns prepared by a CPA. Well, CPA must sign tax returns that they prepare. Any willful violation of this rule can result in imposition of a penalty by the IRS. Disclosure of confidential client information. We know that's a no-no unless you're required to by law. A tax preparer may disclose confidential client information to any party if the client specifically consents to the release of that information. Makes sense. I mean, it's their information. This consent should be in writing, clearly stating the extent of the disclosure and the parties to whom the information may be released to. And lastly here, the use of the taxpayer's tax return information for third-party solicitation. Now, using a taxpayer's tax return information to assist a third party in soliciting business is not going to be allowed and results in a tax return preparer penalty. CPAs and tax preparers should maintain the confidentiality of taxpayer information and not use it for unauthorized purposes. That was a big old lesson. We got a lot of great information in here. Let's wrap it up with a good summary and call it a day. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because
Who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.